I'd like to share with you today some of the lessons I've learned about investing that I think could be helpful to a private investor. And there are three areas particularly that I'd like to talk about. Firstly, I'd like to talk a little bit about markets. Then I'd like to talk about companies and what I look for in companies and I think private investors should look for. And then thirdly, I'd like to talk about a bit about you, yourself as an investor, and the attributes that I think make a good investor. So let me start off talking a little bit about markets. First of all, there's an aspect of markets that has really interested me in my career, and I think people don't pay enough attention to that, and it's what I call the sentiment factor of markets, or the perception factor of markets. In Warren Buffett's words, he said the stock market is both a weighing machine and a voting machine. And so what did he mean by that? He said it's a weighing machine in the sense what you are trying to do, you're looking at companies and trying to decide what they or the market, what is the right valuation for a market, what's the right yield it should be on. So with a company, what's the intrinsic value of that? But it's also a place where a lot of investors are meeting and doing different things, and at times, if they're all voting the same way, either positively or negatively, the market can be carried way above its intrinsic value, the right value for it. Or at times, when people are very pessimistic, it can be carried well below. And you need to know that cycle and be aware when things are overvalued and the sentiment is too positive and the perception is too good, and vice versa. Well, that's a time to be more cautious. And when investors are things are depressed and the voting has all been against the stock market and it's low, that might be a time of opportunity. It's not so much about what the future looks like, but it's about what future is already discounted in the stock market at that time. So the stock market will be discounting a certain view of the future, and the opportunity is when you might have a different view of the future to that which is discounted in the stock market.